Hey everybody, still here, Daily Market Pulse. This is for Monday, September 15th. So stocks mostly lower, and I say mostly because the Dow was actually up. NASDAQ took the biggest beating with the most volume, another distribution day. I believe at this point we should be at like 4 and 1, which is really lopsided. Very lopsided. So almost reminiscent to that when we had the correction a while back. It's kind of weird. So they need to hang on to this thing pretty quick here, otherwise this is going to be fading fast. So let's go look at the Dow. The Dow, I see it held green at support near 17,000, below the 20 or right at the 20 and the 8, but also just above the 50. So reasonable appearance. The S&P is similar in a sense, but it was red, but barely just above the 50 as well, just below the 8 and 20 as well, holding that polarity line very similarly. So it's looking like still looks like profit taking consolidation. Overall, it still could fade harder near the bottom of the channel, possibly, but seems odd that it would do that. But you never know. You just got to kind of follow the lead. Here's the Nasdaq. This is where it collapsed. Now it was going sideways. At this point, it was definitely going sideways. It was not, sort of fading lower. It was just literally sideways, and that's not enough of a retracement. It was holding the window, holding the 20. So the slice through isn't that surprising because it's down to the Bollinger Band near the 50 now, below the 8 and the 20 moving average, just like we saw the Dow, the S&P. There's another window which I guess I forgot to put in. I thought I actually had it in there at one point, but there it is. There's the window, so that's where it's holding right now. There's another one below that as well. So let's go put that one in right there. Yep, right there, and it's extended out just a little bit like that. So those are the support areas, including the Bollinger Band, including the 50, and then percentage retracements. Let's see, the top to the bottom, you'd be looking at, right now we're at the 618. So that makes sense. 50% will take you down to the 50-day moving average. Still a possibility, but I'm looking for support anywhere in this area right now. Right here, 4,500 was the expectation. That's what I'm still looking at. We'll see if that's the case for the NASDAQ. TSX fading as well, down to the 20, just above the 50 as well. Lower part of the channel, holding the bullish piercing for the time being. Everything still looks fine, consolidating. The Bollinger Bands are tight. It's just looking like it's just pausing for another move higher above 15.6 and even into the 15.8 area. Let's load up the DAX. The DAX is looking like maybe this is the point where it bounces off 9,600. That was the expected target. There it is. Looking back to go 98, maybe break 98 to 10,000. Let's see if that's what it accomplishes and what it manages to do. We're going to load up US dollar, Canadian dollar. It was a breakout that we know through 110. It got into 111. Pause at least for one day for the time being. Slightly overbought. Everything rising. 8 moving average, 20, 250. All that stuff's rising. Everything still looks good and long. US dollar, Canadian dollar. Euro US may simply just be a slight bounce. Trend is still to the downside. It might come a little bit higher. I think maybe 1.3050. Look for that area maybe as the area where it might actually start to fade lower once again, maybe retest the lows of 128.50 to 129. Treasuries have sliced through. They've come back to sort of test 136 at this point, and that's about it. Looking for the possibility of lower, especially if the markets go higher, back toward 135 and 134. At this point, this is the end of the road for the yen. That's the last one. I'm going to take you now maybe to the next contract, which is that was the September contract. This is now going to be the December contract coming up here. I'm going to load that one, and that looks very similar. So that's what we're going to be using from now on. But same thing, same appearance. Push back toward 95 is a possibility. We'll be looking for that as the target above and the potential resistance. Let's go to gold, silver, etc. Holding reasonably, testing 1240, looking for a push maybe back toward 1260 to 1280. Otherwise, you're looking at 1200 on the downside. And then you also have silver holding with a Harami and a Doji here at about 1850 or so, with a push back toward 1950 as a possibility. When I move over to crude, this is the October contract. And it tested with a bull sash to the lows at 91 and did the same thing again today. So I'm liking the way this looks right now to go back toward a full 93, close above 94, and get back toward 96 and maybe 97 based on today's candle anyway. That would be my expectation. If we go to small caps, risk on versus risk off, it's still in a flagging like formation, holding at the 50 to 200 day moving average, lower Bollinger Band, including 114. Decent retracement. That is exactly the 50% retracement from the high of the bearish engulfing beginning of September to the low of the essentially the hammer, if you will, or the even previous day of the first day of August. So within a month's time, we had a rise, and then from there now, midway through the month, we've had a 50% decline. So we've had a full, say, 1 point move up, and we've had a half point move down in the exact kind of time and order. A full month up, half a month down. Interesting how they've worked that out. And then we move over to the VIX. The VIX did pop today with the markets a little bit higher into the next target area we talked about, which is exactly 14 to 1450. There it is. What do they do from here? The 50 is slightly rising, the 8 is rising, the 20 is flattening, but at a resistance point. Bollinger Band's opening. Is this enough to allow it to create more momentum into 17? We're going to have to find out. Markets, I think, can go lower. This can pop just at least a little bit as a threat. We'll see what they do with this.